Often, the GEPF members are confronted with half-truths about the state of the pension fund's financial soundness. The GEPF members and pensioners are often told that they must resign and take all their savings out of the GEPF and invest with private insurances, and it will grow in leaps and bounds. What GEPF members are not told is that their pension savings are much more secured in the GEPF because they're invested risk-free, while outside of the GEPF, their investments will be subjected to the fluctuations of the market, which could easily wipe off all their savings should the market not perform as expected. To put this in a proper context, I am joined by the GEPF's Manager Investments, Mr. Siyabonga Mthalane. Mr. Mthalane, nice talking to you again, sir. Maybe if we can just explain to members, what does it mean to have invested in fund risk-free vis-a-vis their investments being subjected to the fluctuations of the market?
The concept of risk-free is derived from the fact that the GEPF pension fund is a defined benefit fund. That's unlike the defined contribution fund, where members' pensions are dependent on what they put in terms of the contributions, as well as the fluctuations in the stock market. The defined benefit fund means that the pension benefits of the GEPF members are guaranteed by law. Now, this means that irrespective of the fluctuation in the investment markets, the members of the GEPF will still get their pension. So there's no reason to panic around that, because it's determined by the number of years, by the average salary over a period of 2 years.
Yeah. Perhaps if you can just explain it, drawing from the financial crises that the globe has experienced over the years.
Yes. Look, the GEPF has been around and the fund has seen it all. I mean, when you go back and look at the early 2000s, we had the dot-com bubble. And fast forward that to around 2008, 2009, we have the financial crisis on the back of the credit crunch. And then you fast forward that to 2020, we have COVID, and then all of a sudden we have the geopolitical issues with the invasion of Ukraine by Russia.
Perhaps let's expand on that and go through these important historical elements of the crises that the globe has been struggling with. Let's start with the dot-com bubble.
Yes, if we remember very well, Thabiso, the dot-com bubble refers to the overvaluation of the stock market. I think the valuation started with the bull run market that started around 1995, leading to the year 2000s, where predominantly the internet-based companies were overvalued. Now, this created a bubble in the stock market, which eventually, the bubble reached its peak around year 2000, but then the situation started to change, which then saw a lot of volatility in the market, and then the stock market crash that followed thereafter, reaching the lows around year 2002. So what made things worse was a terrorist attack in the United States that took place in September 11, 2001. This caused a lot of panic in the market, which not only affected the United States, but it went through across the world, which then saw the indices, the market indices, even being further plunged into negative territory.
So with the dot-com bubble out of the way, then another crisis, the great financial crisis. How did GEPF survive all of that?
Look, it was a very difficult time. So we had just came from the shock of the economic or the market downturn that was associated with the bubble in the early 2000s. But then fast forward there to roughly 5 years later, we have another problem. Now, what would have happened around that time is the economy or the market was recovering from the crisis that had ensued around year 2000. You know, the investor confidence, as well as the consumer and the business confidence, started picking up. However, the problem started when the banks were lending recklessly, giving non-qualifying customers loans. But then these loans were then repackaged into financial instruments and were sold to other financial institutions. Now, over time, when the subprime market collapsed, this then created a problem for the financial system, which then saw a lot of panic in the market. And then you started seeing indices, especially in the equity market, on a free fall. I think the MSCI World Index fell that year about minus 41%. I mean, even our own stock market wasn't spared from that. I think it fell almost 30% just around that year. Now, that spells trouble for the GEPF as well, which is largely invested in our local stock market, which at the time, the GEPF fell about 10.2%. Now, the board felt that they needed then to take measures to cushion the fund from the impact. Then there was another step that the board took in terms of putting in place a 57 billion rand pension fund increase reserve just to cushion the fund from the impact of the crisis.
And we got a shock of our lives. I mean, globally, even in the country, March 2020, boom, COVID.
Yes, Thabiso. So, I mean, I think around as early as 2019, there were rumors around a deadly virus that seems to be killing people in Asia, and particularly China. But I mean, I think from the South African perspective, I think the feeling was that we are far from that situation, obviously, with the proximity or the location of our country compared to China, which is on the other side of the planet. But then fast forward, to the beginning of 2020, around March, we have our own first case. And then the next thing, the World Health Organization the reports that this is a global emergency crisis, and then eventually they declare a pandemic. Now, this spelled trouble for the financial market. Obviously, it introduces a lot of uncertainty. We don't know what's going to happen. Investors don't know what will happen, and it creates a lot of panic. And as a result, then you see equity market falling to the all-time lows. Now, this also not only just affected the markets, but then the broader society at large. But from the GEPF perspective, we are a long-term investor. We hold a lot of these assets. When there's trouble in the stock market, it basically means trouble for the GEPF. I mean, the stock market more or less fell double-digit numbers, around 12% or so. And we saw more or less a similar decline in the GEPF portfolio, which was roughly 12-13%. In monetary terms, it was around 240 billion rands, and that's quite a significant amount of money. Now, the question is, what do you do in such a situation if you had a GEPF? So the GEPF portfolio is a resilient portfolio, which is invested in multiple asset classes, well diversified. Prudence needed to be applied at that time to say, but what do you do? So the decision at the time was to say, well, there's nothing you can do so much when the market has crashed to the bottom, because if you suddenly sell, you'll be locking in the losses. The decision was to say, well, let us weather the storm. Let us trust the process, trust the strategic asset allocation of the GEPF, and then we will weather the storm and monitor the events, the developments in the stock market as we go through time. Now, fast forward several months later, you saw governments across the world responding to the situation, issuing stimulus packages, which sort of brought some sense of comfort in the market. Although at the time the market was characterized by very high volatility, but we started seeing the stock market recovery slowly and gradually over time, such that by the end of that year, the GEPF had recovered all the losses it had made. at the time. So this just demonstrates how resilient the portfolio is.
Yeah. And while you are recovering from COVID, then the Russia-Ukraine crisis, the war in Ukraine, to put it aptly, which also brought its own dynamics as well. I suppose that also piled up the pressure on GEPF.
Yes, that's very true, Tabi. So it's like it never ends. You move from one crisis to the next. So, and then beginning of 2022, then we see Russia invading Ukraine. Now, this means that we had an already elevated inflation driven by core inflation towards the end of 2021, but the invasion made the energy prices worse as well as the food prices worse, which then means the overall inflation increased over time. Now, the central banks had to respond to the situation, and one of the ways they respond is by increasing interest rates. The Fed started increasing interest rates around March, but the South African Reserve Bank had already started. And then from there, we saw a series of interest rate increased in line with the increasing or rapidly rising inflation. And this does affect asset classes. I mean, you will see volatility in the stock market, in the equity market, but also it has implications for the bond portfolios. Now, the GEPF is invested in all of this. So this volatility that plays out in the market has implications for the GEPF portfolio. So when you look at the performance of the fund, of the GEPF in the last financial year to end of March 2023, you will see that the market or the performance of the fund has been flat, in line with flat investment markets.
So given all these historical challenges that you've outlined, how would you then compare the performance of GEPF vis-a-vis its industry peers?
Yes. So, as I said earlier, the GEPF is a long-term investor. So when you look at the returns of the fund over a long period of time, the fund has consistently delivered positive returns, inflation-beating returns. So when you look at, for instance, the 10-year number, the fund returned 8.13% annualized over a 10-year period, but also the fund returned 7.06% over a 5-year period. Now, this also just demonstrates the resilience of the fund, that it performs even under adverse macroeconomic events. So even when you look at the medium term and you look at, or you compare the performance of the fund against the ASISA multi-asset high and medium equity classes, the fund has done well. It has outperformed these classes, although with a similar risk profile.
So let's bring it home, if you don't mind. What would have, compared, if you were to put in comparisons, somebody who's put in 1 million rands of investment on the all-share index in the JSE and a member of the GEPF, how would they fared if you were to compare them within the midst of all of these dynamics and challenges?
So if you had put 1 million rands into the GEPF portfolio in early year 2000, that would have grown to about 3.9 million rands by the end of June 2023, and that represents roughly 10% return over the period. And if you took the same amount of money and put it in the JSE all-share index, that 1 million rand would have grown to about 3.5 million rands over the same period, which represents about 9.1% growth over the period. Now, this just tells you that over the 15-year period, the GEPF portfolio outperformed the JSE all-share index.
So in conclusion, there is a safety net, but I want you to explain in context what this safety net means.
Thabiso, so the GEPF investment strategy as well as the investment policies are solid. The fund has demonstrated that over time, throughout the crises. So the fund has been able to grow its asset size. If you look at the size of the fund from year 2009, it was roughly 600 billion rands. If you fast forward that to 2022 March, the fund was at 2.3 trillion rands. Now, this is very important, Thabiso, and it's got implication for the members of the GEPF. But also, let us remember that the fund is a defined benefit fund, which then means that the members' benefits are not affected by the market fluctuations. They are guaranteed. As a result, whether the market fluctuates up or down, whether the fund investments are performing poorly, the benefits of the members are not impacted. But I think what is key, and this is the most important lesson to take out of all of this, is that the GEPF is resilient and it can navigate difficult market situations.